Yo, what's up guys? In today's video, what I'm going to cover is the basis on what everybody is missing in their D2C brand and ultimately why I created scalevelocity.io. So with that being said, let's dive a bit deeper. Now, I've consulted over 50 plus D2C founders in my past 2.5 career in the space. Now, the biggest bottleneck I see across the board is the lack of fulfillment in the process of acquiring new customers, right? So if I look at just what every single brand is doing, ultimately everybody is running ads across Facebook, everybody's running ads across TikTok, everybody's running ads across Google. But the thing is, majority of brands are using an agency to run those ads for them, right? So they're outsourcing their growth. Now, I am very bullish on capital efficiency going into, we're halfway through the year with 2023 and going into 2024, right? If I look at the events taking place right now, you have inflation going up, you have the debt ceiling going up, right? We capped off the debt ceiling in the US government, they had to raise it up. Now, what does this tell me in forecasting going into the following year, right? Well, something has to break in business. Tech has already seen a downturn and they've seen a crunch, and I expect that to hit even more going into 2024. And I expect the same to happen in the online retail space, right? Where, okay, if their value in the dollar is lowering, right, there has to be some sort of reset. And there's going to be a time period where people stop buying in order to fund that reset of what happens when the government stops printing more money to bail out the consumer good, right? And we've seen this with COVID. Like, the reason why 2020 majority of brands had a huge upload of just progress was because there's so much money going into the markets, right? That wasn't supposed to be there. But now there's going to be a point in time where something has to reset to be back on track, right? And that's just some macroeconomics with everything I covered on a micro scale as well. Now, how does this affect D2C e-commerce brands, right? Well, the brands who survive, let's say, a downturn or a shrink in the market is ultimately those who are capital efficient. The reason why working with the agency isn't capital efficient is because most of the time you have to pay 20K retainers regardless, anywhere from 10 to 20K retainers a month for a brand to manage your paid ads, right? And the downside is there's no guarantee in performance, right? Because an agency, what their process looks like is they hire a brand, they onboard the brand, and they delegate that ad account to a junior media buyer. So then you have a junior media buyer managing your account, which doesn't make sense. When I look at SaaS companies in the B2B space, they have all their sales team, they have all their marketing team in-house. So the correlation to that is a brand that finds success has capital efficiency across the board. They downsize their team to, let's say, I've seen D2C brands operate on a 25-person team, which I think you only need a team of 6, right? You need your founder who's really good at operations on the back end, fulfillment, making sure everything is stable with cost of goods. And then also you might need a fractional CMO, which is what we call the growth consultant. So the growth consultant pairs up with the founder or the operator and pretty much dials in all the unit economics from the front end acquisition to also improve scalability, right? Now, the GC understands all of these access channels universally, right? So the power of marketing is, instead of using different offers across different channels, you want to use these channels congruently, right? You want to use Meta as your top of funnel prospecting to build a solid foundation. You want to retarget those users on Google because there's a heavy search space compared to Facebook with Google, right? So Google is going to be the next step to really scale you up. Lastly, the very last access channel you want to tap into is TikTok. But the thing is, your offer product has to be more tailored towards Gen Z type of audience, anywhere from 20 to, I would say, 30-year-olds. That's where the real pocket of audience is to make money. Now, how do you scale across these channels? Well, you need to have a high AOV bundle. With this high AOV bundle, you have different product verticals going after different archetypes to have this evergreen offer. The reason why I suggest having a high AOV bundle is because, for example, let's say you sell a product at retail price at $150 and your gross margin on that, let's say, is 80% after expenses, or even 70% after expenses, right? You literally have to get you have to acquire a customer less than $80, which is very doable in this space, right? And an $80 conversion rate to break even is more likely than, let's say, if you run a product at $20 after expenses, then you have to acquire a customer at $10 or even $15, which is not scalable, right? So with the high AOV bundle, you can deal with fluctuations in the marketplace or the algorithms change, right? And the thing is, you have heavy cash flow up front so that you're not banking on LTV on the back end to make that money back to get that customer to buy back, right? Your business is profitable once that conversion metric happens, and that in a single month, you have more cash flow to now front your costs to now go buy more supply or launch different product verticals, right? The name of the game in e-commerce is we want as much cash flow upfront as possible. And apart from that, we're really winning if we get those same customers to buy back from our business multiple parts of the year, right? So with that being said, that's pretty much the foundation on why the structure is from advertising, and that growth consulting can get you there. Now let's dive into the other members that I mentioned before of who you need. Now, for ads to work, well, you need a specialist who understands all these channels, which I just covered. That's the growth consultant role. Now, apart from that, what else you need is that creative flywheel system. You need a system to constantly pump out multiple creatives in a given week. You need different variations in direct response copy, different variations in direct response creatives. You need different archetypes and static images and also animated GIFs, because with Facebook, you don't know what works for your brand. I've seen it in the past where direct response creatives actually underperform compared to static images or animated GIFs, right? And it really just depends on what works for your brand based off the product archetype, right? Every channel is different. What works on Facebook might not work on TikTok. What works on TikTok might not work on Facebook, and vice versa for static images on Google, right? So each channel has to have a very structured process in testing, but as mentioned before, you should only focus on one single channel. So now let's talk about how to build the creative flywheel system. The system consists of, you need a creative strategist, somebody who's good at creating concepts, and then from there, you need your editor to create variations of these creative concepts. The reason why we do this is because when we're testing on the ad side, we're able to be like a sniper to aim and say, okay, what is the best winning ad creative? Let's create more variations of that while we're still testing on the back end of other different concepts. Now, apart from having a creative strategist who understands the market and who can do research across multiple platforms to see, okay, what are other competitors doing to create concepts, and with the editor putting everything together to make it come to life. Now let's talk about the next step. You need a creative coordinator. A creative coordinator is a specialist who can do massive amount of outreach to content creators to get that direct response creatives done, right? Because if you have direct response creatives, you're constantly testing that, and you're constantly testing static images. I mean, there is a low percentage of you failing because you're optimizing the biggest needle possible, which is the creative element. I see too many brands only test 5 ads in a month, right? You need to increase the volume so that you have more chances of finding that winning ad creative, right? And when you follow the modular framework, you now increase your chances of building the right perfect creative. And once you have one creative, that's all you need to really scale your business on any access channel, right? Because I believe the concept of ad fatigue is no longer valid, especially if you're going broad on the campaign level. So with that being said, those are the main foundational roles. And then you tackle that with maybe an email backend, not even an email specialist, more so a direct response copy specialist who can come up with the right sales argument on the backend email flows, who understands your business at a high level, and also can call up your customers and ask them questions apart from post-purchase surveys to get that information, to come up with new concepts, to come up with new angles, right? That's really all you need, a team of 5 to even a team of 6, where you have maybe 1 or 2 media buyers apart from your growth consultant overseeing the ad account, right? And the process will look like maybe you learn how to run the ads, and then you have that media buyer underneath you who is overseeing the ad account. And then as you're managing more access channels, that media buyer is full stack to run all of everything together, and the media buyer is working with your creative strategist to keep optimizing everything. But essentially, you need a growth consultant to get you ramped up and to build everything out so that you're pretty much scaling with an in-house team. And the process behind that is because with the in-house team, you're capital efficient, you're not paying 20K retainers, and you have the structure to say if you want to exit your company in the next 2 to 3 years, you have the chance to do that. Because being able to exit, you're not going to be able to catch a high multiple if you're outsourcing majority of your growth with agencies. It's very rare, and the landscape of VCs or even mergers and acquisitions has changed in the past 2 years, right? And even we look at that in the equity firm where a lot of VCs are strapped for cash, not really investing into too many companies. So the same, if you want to exit your company, you need to have a strong LTV, you need to be profitable on the front end, and then you need to have your marketing in-house. So with that being said, those are the segments I would look at if I was a D2C founder and I'm trying to scale in the next year, 2 years. I would do the opposite of what traditional brands are doing. I would no longer rely on agencies. I would take in charge of my growth and marketing. I would push high AOV bundles. I would look to build everything out in-house so I can have that competitive edge over my competitors so that I am capital efficient and I'm not paying out these absurd retainers with being burned in the past with multiple agencies. So with that being said, if you want a more in-depth structure on how I broke this down below, I'll drop my 30-page protocol. You can go over it and review it. If you're looking for this help, I have a couple of spots open. I'm looking to only take on 2 more brands this month, and then from there, we're pretty much setting up shop. But yeah, feel free to give me a message or email me. My Instagram handle, I'm on Twitter, BChrisHRDZ. I'm on here, YouTube. This is going to be on LinkedIn as well. But if there's any questions, drop me a message, and I hope you found this valuable.